because the Nigerian Exchange Limited is set to launch the West Africa's first set of exchange-traded derivatives, or ETD. And that follows the approval by the Securities and Exchange Commission for 7 derivatives contracts to be floated. The list comprises of stock futures of Access Bank, Dangote Cement, GT Bank PLC, MTN Nigeria, and Zenith Bank. And also 2 non-stock-based contracts were also approved, and these are the NGX 30 Index Futures and NGX Pension Index Futures. And you can see the list of the 7 on your TV screen. Let's talk to this new horizon in Nigeria's financial market history as we turn to Ayodeji Ebo, who is the head of retail investments at Chapel Hill DENHAM. Thanks for coming through, Ayodeji. This is good news. We appreciate your time. How significant is this news of S.E.C approval for the launch and trading of 7 new equities-backed ETDs on the NGX platform?
Yes, thank you, Boasin. Good evening. And I think this is very positive because the NSE, which currently now NGX, have been trying to push this initiative for close to about 5 years, even under the Mr. Oscar Oyema's dispensation. And now coming around this time, I think it will be well received by the market, and because it creates a lot of opportunities in the market. It will help create different activities. So it means just a particular stock, like you listed, there are 3 banking stocks. You have the Access, Zenith, and GT Bank. Then you have the industrial goods and also the telecoms. These are very liquid stocks. So you are able to take different view or different positions in this stock. Not trying to go too technical. So your views can, if you feel that maybe a stock would go down, you can take a short position and go and buy a stock, a GT futures market to cover your position on that day. And depending on that direction will determine whether you make money or not. So rather than just trading just the equities, the plain vanilla equities, buying the stock, it creates an opportunity to be able to, even while you have the stock, you can also make money without even owning that stock, depending on the direction or the contracts that you are buying in the market. So I think this is very positive, and it also places us in very positive light, even amongst the foreign investors that have been trading these securities in other markets.
Ayodeji, you were talking about what investors need to know about this type of financial derivative products. You and I spent some years of our life in the marketplace, and this whole pursuit of derivatives based on the underlying listed stocks had taken more than 10, 15, 20 years in coming. Now we are here. How will it really work? You've been technical a little bit earlier. Make it all technical for me, because again, this is not... this is taking the whole stock market trading a lot of steps further into what you have in developed economies such as the US, UK, elsewhere.
Yes, thanks. Derivatives are very technical because like you rightly mentioned, they derive their value from other asset classes. So speaking about the features, there are stock features that have been approved. So what investors will need to understand is that if I believe that one GT or Zenith Bank will decline, so I take a short position, so I can sell my current stock because I have that view that the stock will decline. So if Zenith, for instance, is maybe at 24 Naira and I believe it will go to 20 Naira, I can short my position and go and buy a futures contract to cover that position. But we know for futures, this is the standard market, and you are not expected to deliver the stock. So what I would do is I would buy a contract that would help cover my position. So I may still hold my stock, but based on my view, I am buying a futures contract that GTB would go down to about 25 Naira. So if it's, there's a counterparty that is the seller. So if on that day, on the day that is maturing, if GT Bank doesn't get to 25 naira that I've projected, it means that I would have to, because I've promised to someone is selling, so I promised to buy at a particular price. It means that I will have to pay the other person, and if it goes below that price, it means I will have to receive an amount from the. It's a bit technical, and what we would see is mostly traders and portfolio managers that will be trading this stock. We don't expect just the mostly like retail investors to begin to trade that, because they need to also understand the plain vanilla stocks first. So what we would see is mostly the fund managers. They have a position, they have a view, and they are taking contrary position. Before the closure of a contract, I can decide to close that position. So if I'm taking a long position by buying a contract, and I discover that may not go in my position, I can short that position. So you can see the activity that is being created on just one particular stock, and that is what derivatives, what happens. You see a lot of activity in the market based on different views. Some may believe that it's up, it's going to go up, or it's going to go down, and you begin to see a lot of activities within the market. And we also expect that settlement, in terms of settlement into account when you buy, will also be instant. So you can easily cover your position when you feel that it's going the other way around, and you just cut your losses. So it's going to be, we foresee more interesting times for the market.
Yes, Ayodeji, do you think the main markets will or should react positively to the underlying stocks or companies that are now going into stock futures trading?
I believe it will, but for those that will start the trading, mostly those that are used to trading the future, the foreign investors, currently they are not playing significantly in the market for very obvious reasons. So we believe that once the coast is clear in terms of FX liquidity, and we begin to see foreign investors, they would begin to see improvement in participation, and not to leave the retail or domestic investors. So we would see some fund managers, the proprietary traders, they will also that understand how these features of contract works. We'll also see them taking position in those stocks. So I think it's positive. It creates visibility for those particular stocks. And I think this is just the pilot phase, and that's why we just have 5 main stocks and 2 indices. And depending on how it goes, we'll see that extended to other stocks.
Ayodeji Ebo, Head Retail Investment at Chapel Hill, DENHAM. Thank you very much. We appreciate your explanations and raising the curtain on this notice that came today from the Nigerian Exchange Group, PLC, of this approval by the S.E.C for those 7 stocks futures, 5 stock futures and 2 index futures that will now be part of the derivatives market in Nigeria.